Hey everybody, so it's Monday and I took a trade already here. I made $87. I first bought in 250 shares and then it went up and I bought 150 shares and then I sold 400 shares at 342. So that's this company AIM right here, and I could have probably made a little more because it kept going up. So I sold at 342. That was like around here. So I guess I could have gone up a little bit higher to 248. But yeah, because it might continue going up. But then again, this right here can be a resistance point. But look, it's gonna break the resistance point right now. It's gonna probably go higher. So the markets, they all went down today. The S&P 500, the Dow Jones, all because of coronavirus. No, is it gonna break it? Break it. I guess if I would have held it for longer, I could have sold up here. Look at this. Wow. I should have held it. You see, this right here, when I sold it, this blue line right here and this yellow line barely were about to cross. They were meeting. Right now they already crossed. Usually when they cross and the blue line's above the yellow, it means it's gonna go in an upward direction. And it looks like it is going in an upward direction. It's at 370 already. It's probably gonna hit the high of the pre-market high of 4, because pre-market right here, it was the high of 4. And this right here where it's like shaded a different color, like it's pre-market. All this is pre-market. So right here, this is where the market opened. So I bought the dip. This time I just went in and I bought the dip. Like it went down all the way down here. And I bought it down here like at 315, I think it was. Yeah, 315. $3.15 a share. And I bought 250, so I think it was, so you just multiply 250 shares times the share price, and that's how much I invested. And then this time up here I added when it went up. So there was a halt on pretty much everything, the whole market, I think, for like 15 minutes. But so yeah, this one is the one that I traded today. Where is it? This one, AIM. And you see it's already going. Oh my god, I probably could have made, like, if I would have just held it for another freaking 5 minutes instead of $87, I could have made like what, $300. I'm not sure how much I would have made. Yeah, but it's because like, you see, it went up all this and then started going down. And then this one did kind of have good news. Like right here it says AIM Immunotech's drug. This is a drug they came up with to be tested by Japan's National Institute of Infectious Disease as a potential treatment for the new SARS coronavirus. So I guess they came up with this drug, and it's going to be tested by the National Institute of Infectious Disease for a treatment for that coronavirus. Look at it, it's soaring. Oh, it started going down now. Look, oh my god. So it hit 4, it hit the pre-market high of 4, and now it's going down. I guess everybody was holding on to that. They wanted to hit the pre-market high there. You see, I guess I could have held it at least till 370 and made more. But you know, $80 in how much time? It took, it must have been like So I first went in at 9:33, which was 6:33 here in California, and then I sold at 9:51, which is 6:51 in California. So yeah, that's like 18 minutes or something. That's pretty good because I get paid $16.50 an hour, and to make $87 and 18 minutes, I'll take that. It could have been more if I would have just held it for a little bit longer, and if I would have just taken it all the way to because I sold it at $3.42, and if I would have taken it to $3.70, I think it's gonna break the 4 though, because this right here, the MACD, you see how the blue line still doesn't touch this yellow line, even though it did dip down right here. Somebody probably bought the dip right here, and yeah, it is overbought. Like right here, when this blue line up here, it is way up here at 70. That means it's overbought. And when I bought it down here when it's by 30. That means it's oversold. And so it might go up a little bit more, or like, but if it does break $4, it'll probably go higher. But it seems like it doesn't want to break the $4 resistance point. I traded last week too, and I took a loss, a small loss, but I was like recording the whole thing, but I was pretty much getting super mad and like already cussing, and like, so I just didn't want to post the video. What if little kids see this? But not that I want little kids to see this, because this is not something they should be seeing. But so I know I took a trade. It was this one, and at one point I was losing $300. So I first bought, that was the 5th. So what day was that? I think was yeah, it was Thursday. So on the 5th, because this one I've traded it before on the 2nd, and I lost $21. But then on the 5th I traded it again, and I lost another $7 or something like that. So total loss with this company is $28, almost $29. But yeah, at one point I was losing 300, but thankfully it recovered. So it kind of like went down, and then it recovered to where my entry point was. As soon as I sold it, it just passed my entry point, and if I would have held it for a little bit longer, I would have made something, like a little bit, but not much. But then again, like, you never know. What if it goes to my entry point and then it goes back down? So I'm just happy I did sell, even though I lost like $7 on it. So my account's been growing, and tomorrow I have one trade. I already took a trade. So if I take a trade tomorrow, which is Tuesday, I'm gonna have 0 trades for Wednesday. But if I don't take a trade tomorrow, Tuesday, I still will have one trade for Wednesday. And that's the thing about this, like, when you trade, like, for instance, this one, how much did I make? Roughly 15 and another 10, that's 25, 26, that's 27 cents. You see, some people trying to make $1, 50 cents, 40 cents. I think if you have a small account, you gotta kind of take small wins, like those 25 cents, 20 cents. It's not much, but if you put in like 400 shares and you get 20 cents, it's like $80 or $90, depending what share price you get it to. Because if you buy a expensive share price, then yeah, you might not get that many shares to, like, let me give you an example here. There's this one that's $4.10 a share, and it's, oh, and I was thinking about getting that one. Good thing I didn't get that one. Because this one, right when the market opened, it did go up a little bit. What did it do? It went from 460 to 480. So yeah, that was like 20 cents. Dang, I was gonna get in that one. I didn't get into that one. I was looking at this one because they came up with that drug. So what was I saying? Okay, so this one's $1.45 a share, right? So if you buy down here at $1.45 a share, hit the buy button. It's probably not gonna let me, cause so then you see you could get 400 shares at 584 right here, $584 worth, 400 shares. But then if you get a more expensive one, like a more expensive company, like it's like, just pretend we'll say this one, it's $15 a share. So we'll just say we'll try to buy here at $15 a share. Buy. So you see, just for 200 shares is $3,000. It's a lot more money. You're risking a lot more money. Just for 200 shares. But then again, these other ones that are more pricey, sometimes they do go up like $1 or $2 easier. But look at this one. When the market opened, it was at $18 and went down all the way to $15. You would have lost 18 to 15, $3. Probably right now it's gonna try to move up because you see the dip already happened and probably people are trying to buy the dip, but who knows? Might continue going down. This one doesn't really have any good news. This news, it just says these 9 companies, so it's not specific to this company. Like the one I traded, yeah, and it's going down now. Good thing I got out. So the one I traded was the news was specific to the company that they came up with this drug called Ampligen or whatever it's called. So yeah, it was good news for it. But okay, I'm gonna stop recording. Just talking. Like, I don't know if I'm making any sense. Hopefully I'm not confusing anybody here. But yeah, this is super risky. I don't recommend it. If you're gonna trade, try to make basics, like not try to get rich overnight, because some people they use this leverage to make a killing, make 10 grand, make 5 grand, maybe 2 grand. But then if it goes the opposite way, you're screwed. And what I traded today, well, it wasn't even that much. It was I think it must have been like 1,200 total. So these are all my trades. Yeah, it's not that much. I'm just gonna show you guys. I don't care anymore. Like, most of these are Extreme Fortune stock recommendations, and some of them I sold. Like, I did sell this one already. This is a pot stock. This one, I guess it did go up a lot, but look, it went down 10%. All these have gone down like so much, 14%. Clovis. Which one? The one that's pretty much I think I have $0 now is this one. It went down 37%. It's the worst one. And so the Dow Jones went down 5%. Nasdaq went down 4%. A lot of people say this downturn is a good buying opportunity because you're getting everything at a discount. And also another thing that they say is every downturn has recovered over time. But yeah, it takes time. Sometimes it could take years to recover, maybe, because if you look at the crash of 2007, 2008, the housing market crash, it was like a over 2 year downturn. It was 2 years of going down. And then it took about 6 years to just break even. 2013 it started to recover, and then from there on out it recovered 100%. But then that's the Dow Jones here. But then if you look at the NASDAQ, this one was way worse in 2000 and August 2000 or February 2000. It took a 2-year crash, 65% loss. So that one took a lot longer to recover. It took about 13 years to go to the break-even point, kind of, where it's whoever bought here at the very high, it would have taken them 13 years just to break even if they bought up here, which is, so right now what's happening with this coronavirus is just barely going down. So hopefully it doesn't go down to like this point right here. I don't know what's gonna happen. Yeah, this is kind of a risky situation here. So it might go down for a couple years. This one's been going down since December 2019, so maybe by 2022 it'll start recovering, or it'll be the bottom, like, you know, the bottom right here. But hopefully it doesn't continue to go down, because then my losses are just gonna get bigger on my Merrill Edge here. So the thing I like about day trading though is that you put in the money in and then you pull it out that same day, so it's nothing that you're holding long term. But for all these long term investments, and even this Acorn account, the investing app, if this downturn just continues for a couple of years, it's gonna eat up my gain, and it's probably gonna eat up my principal, like money that came out of my pocket. Not any of the gain is pretty much my money, which I don't want, but we'll see. Oh my god, negative 500. This is my Acorn account, negative 500. Yesterday, on Friday, I had a $200 gain, a $257 gain. Now it's negative 200. But this one I'm doing long term, so I mean, I don't mind. Like, here's, yeah, I went even lower, way lower. Like, that's the perfect time to maybe do a one-time investment right here. Where is it? Where it says one-time investment. Like right here, I could put like 5,000, not 5,000, like 1,200, 1,500. Why? Because I'm buying at a lower price. But yeah, it's this one I'm thinking about doing 10 years. So it is what it is. I mean, I'm losing 500. Okay, so, and then the other one, my Merrill Edge, is where I got all the, like, the Extreme Fortunes recommendations, some of my personal stock picks like Tesla and AMD and stuff like that. But yeah, it's pretty much red. Everything's red here, no green. This is the overall market type of thing. Like let me see how this one right here is it all gonna be red here? Red. There's some green. What's this? It's like a gold company, but I guess it's like a bear market or something. Like, when it says bear, I think it does good when there's a bear market or something. I'm not sure, because this is a bear market. Bear market's when everything goes down. The bond is okay. That's like the safest thing. But yeah, you don't make that much I guess you could have made 13% in from October 2018 to now, so that's a year, and that's too long. Can't wait that long. I wonder what happened to the company. Where is it? There's a company here. This one went up 1,000% in a year. Oh my god, it actually went. But now it's, so it is being affected by the, but not that much. Yeah, if I would have bought in this one in December 2018 and I would have sold it in December 26th, that's a 5,000% gain. That's life-changing gain. If you put in 5 grand or even 2 grand, 2 grand times 5,000%, $100,000 in a year. I'll be happy with that. Okay, I should just shut up now, and thanks for watching my video though. Okay, bye. So I just took a screenshot right now of my Merrill Edge, and just today I lost 2,261, and I have a loss of $3,000 again. So I know I was down this much before, like 2 weeks ago, and then it recovered, and I kind of was like only negative 800, but now it's negative 3,000 again. And this in January, it was before the coronavirus happened, I was up 5,000, but now it's all gone, and now I'm negative, just losing. So I'm just gonna have to stick through this. Like, hopefully once the virus is, it's not killing any more people, or it's just like it's controlled or whatever, hopefully then the market starts recovering all the losses. But yeah, that was my Merrill Edge right here. This is where I have like the stocks that that have been recommended by Extreme Fortunes, Total Wealth Insider, Profits Unlimited, and some of my personal picks. Like, but yeah, it's depressing, really depressing. So if I could just day trade instead and make like $87 daily. But the bad thing is that you can only trade 3 times every 5 days if you have an account less than 25,000. My cash account right here is only 3,800. Like, this is a good buying. This is a good time to buy this one, because this one, after the coronavirus goes away, like, this is the free stock I got. It's one free stock for putting in $100, and this is my entry point. It's way up here, and the thing just dipped down today. So that's pretty much a good buy right there. Like, if I buy in, like, I could buy maybe 10 shares. That's like $100. And then hopefully in a year from now, once everything, the coronavirus goes away and the markets recover back again, this thing's gonna go back up and make new highs. If you look at the daily chart here, it has gone up before, up here to the 14 area, like $14 a share. That was the high back in February 2017, so 18, 19, 20, 3 years ago. That's a long time. And then if you see like these dips here, like, then they shoot up. So this one, it was 2018, December 2018, and it took till February 2019. So what was that? December, 2 months of going up. So let's say the coronavirus goes away, I buy down here, I wait 2 to 3 months, it should kind of like recover up to this point. But then again, how much am I really gonna make? I think it was a 30% gain, because like from here to like around here, you can see right here it says 30%. So if you put in $100 times 30%, you only make $30. That's nothing. But if you put in $1,000 times 30, that's 300. Yeah, $300 in 3 months. Yeah, not enough. I think I would rather try to day trade and make like $80 a day. Like base hits only, because right now, like I recommend if you have a small account, do base hits, like small gains, not ask too much, $20, $50. If you can make $80, and over time, your account's gonna grow. Once you get like a good amount of growth, you could take on a little bit more risk, and then try to make, instead of $80, try to make 100, 120, and keep just like growing it little by little. Not try to make 5,000 in the very first trade, or make 2,000 in your very first trade. It's too much risk to have it go against you, and then you end up being at a loss, and your money pretty much goes down the drain, your hard-earned money. Okay, so that's it for this video. Thanks for watching.